Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday pre-market prep. Hope you all had a great weekend. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. A lot on our radar. We have a merger to talk about in Chinese stocks. We have Apple and Amazon both trading up ahead of their big events starting tomorrow in Amazon's case and just tomorrow in Apple's case. We're going to talk about the rotation. Last week we had a rotation into value. That rotation is now reversed again, out of value, back into growth. We'll talk about video game stocks with our guest, Michael Pachter from Wedbush Securities. He would join us at 8:35. Joel, we'll bring you on here. How was your weekend, and how are you doing here overnight?
Fantastic weekend, and the S&Ps are doing well this morning. We're up 19 handles at 34.92 and a quarter. You have crude trading in the red by 60 cents at $40 even. Gold continuing to hold over 1900. That's up 410 at 1930.30. Silver clears 25, up 19.7 cents at 25.31. And Bitcoin clears that $11,000 hurdle. We're up $215 at 11,325. Triple D, we got to bring you in here, and I have never gotten more emails asking a more important question of you.
Will I be working today?
The question is, in Canada,
Yes.
on a Canadian Thanksgiving,
Yes.
do you eat geese instead of turkey?
No.
Okay.
The goose just doesn't taste very good, and Canada Goose Company doesn't appreciate that either, us eating the geese. So the answer to your question is no, we do not eat Canada geese. Although if we did eat Canada geese, they are literally everywhere. So I think maybe we should make that a tradition, because then I wouldn't have 100 of them on my front lawn.
Happy Thanksgiving, Dennis.
Happy Thanksgiving. So yes, I do work on the Canadian holidays. Yes, we do eat turkey on Thanksgiving. Yes, I do normally celebrate the U.S. holidays, though, because I follow the U.S. calendar, seeing as how I trade stocks in the U.S.
All right. Well, they're celebrating here the Columbus Day rally, whatever you want to call it, the high of the week on Friday, right? Close on the highs, near the highs. No bad news over the weekend, no deal, but certainly no bad news here. And just got a lot of catalyst here for some major stocks.
Catalysts that were predictable too. We talked about buying Apple ahead of the event. It often works. Well, if you were so inclined to do that, you're up a cool 3% here this morning with Apple, because it is trading higher. If you didn't want to take all the risk and you just shorted the Qs against it, you'd still be up, because the Qs are not up as much as Apple. They're only up 1.7%. Amazon with Prime Day too, which I know you guys mentioned on the Friday evening show, would have worked as well, is trading up 65 points ahead of Prime Day tomorrow. So you have two predictable events, and the stock's predictably trading higher ahead of those events. Again, great alpha to extract, just owning these stocks ahead of those events.
And boy, the charts in these are they're both hanging at the highs of the pre-market session. So just keep an eye on that pre-market high, where it comes in, see if it coincides with the daily high, looking for any kind of follow through.
I mean, here you are. Amazon is breaking out. Mitch so pointing it out. 3,200 was significant. We had the rotation come in Friday after the open. We've been talking about it. When is it going to rotate back into growth? Because it seems like every time value gets a good couple of days, and like you were saying, Spencer, is this it? Is this the turn in value? And no, they pull the rug out from under it and they go the other way again. So yes, there are some value stocks still trading higher, but value did not have a great day on Friday. You can look at a stock like Nucor, for instance, NU, steel stock, open up near the highs, down all day. Opposite, obviously, is the NASDAQ and a lot of the components of the NASDAQ, where a lot of these stocks open fairly weak, even take Amazon, and they rallied all day. So the rotation is now very, very clear here this morning. IWM trading up only 0.25%. The Qs are trading up 1.7%. So there's another 1.5% blowout between the Qs and the IWM. So the money, after a few days of staying away from tech and buying these value names, suddenly Friday starts to rotate back into growth, and that trade continues here this morning.
All right, earnings week, but that doesn't get started until tomorrow. We have the banks, which have not, they've been dead. They've been part. I mean, I noticed J.P. Morgan and Bank of America rallied last week.
Yeah.
102 seems to be your bogey here. I see a pair of highs there. J.P. Morgan ahead of the report, but nice over the last 3 weeks. It's added $10, so maybe some folks leaning long into the J.P. Morgan report.
I mean, just predictable again that stocks get bought ahead of their reports. We talk about this all the time too. And yes, when do we have the first bank reporting, Spencer? I know it's this week. What day?
Tomorrow morning is JP Morgan and Citigroup.
JP Morgan and Citi both reporting. Both stocks kind of sleepy for a couple of days here, but like Joel was saying, they've had a pretty good 2-3 weeks. JP Morgan coming from the lows of 91 up to 101. So there's a quiet little 10% rally in JP Morgan. So now you're like, okay, you're coming in here buying it now. Is there another day of rally ahead? Potentially. Am I going to take it through the report long? No, because every time it seems like these banks, you hold them through the reports, they might beat, but then they just pull the rug out from under and find a reason to sell them there anyways. JP Morgan 105, major, extra, super duper resistance, Joel. If it was to get up to that level there, I'd be a seller. It's hard. It's hard to get on the bank trade because it's been dead money for not just, since COVID. These have been, really underperformers here. If we go to the chart for 3 years, I mean, JP Morgan was $100 3 years ago. If you were buying tech stocks 3 years ago, you probably doubled your money in most of them. So it goes to show the money still flows to where it's being rewarded, and it has not been rewarded in the banks. Is it different this time? Maybe, but I'm not betting on it.
If you look at this JP Morgan, you mentioned that 105 area. I don't know I guess that's when everyone got excited in June when this got into the mid 120, towards 120. But basically since July, even June or July, you've really been in a trading range from like 92, 91, 92. I know it did dip under 90 a little bit. And then the top of the trading range has just been above that 105 level. And you had the 90 as a major low back in 2019. I don't know. It's just you have to take, what will determine a breakout, in this thing, a breakout that will last, never even come close to a 50% retracement. If you look at 140 to 80, that's a 60 point, I guess 110. I guess you did get near that, but, little bit of a dividend, it just hasn't been the place to have your money. Warren seems to think it's opposite in Bank America, but that just seems to be in a trading range as well.
So let's go other individual stock news here. We got stay with tech theme. Twilio buying something and it's popping. It was up 20. It's only up 13 now, so it is leaking very quickly here. TWLO, what is it buying?
Well, it's that kind of a morning, like you said, right? They're pretty much buying growth, and so. News.
So if you have any news, they just buy you anyways.
We're saying, Twilio is buying a private company. They're spending $3.2 billion to buy a company called Segment. News or no news, like you said, Dennis, the rotation is back into these growth names. So
yeah, Joel, how high did we get on Twilio? I saw it up to over 20, but I didn't look at a chart here. Oh man,
yeah, we got
even higher.
Yeah, we are actually over 335 here.
So they've given back half the gains already.
Yeah. Boom. Actually, I got 337 print on that. Now you're $17 off it.
Exactly half the gains given back right now. So maybe at a point, maybe you do buy it just for a trade. But you never know how these things work. Sometimes they discontinue and they give it all back. So when they give half of it back, it gets you spooked a bit. But I mean, if you're saying buy the dip, this is the dip in the pre-market. It depends on your time frame, I guess. But we're on a pre-market dip right now.
There is a dip there, and 2 candles right here, 321. holding in. I don't mind these kind of moves. When a company has a run up like it did in its stock, and like AMD did the same thing. I don't think you need to go. I mean, 3.2 billion. I don't know what the valuation is on it, but I like these kind of moves when companies do this. They're doing something with their stock, right? They're not. I'm sure there's not a dividend on this one, but what was the stock that you talked about on Friday that was getting taken over, and you were like, man, that seems like it's too pricey.
Yeah, it was the AMD Xilinx deal.
Yeah.
And I just didn't understand that the rumor was for 30 bill, and they were all of a sudden giving it more than a $30 billion market cap. And it was trading in the pre-market on Friday, like at 127, 128. It's now 119. So giving back significant gains. I mean, if you're coming in and buying these things up 20 points on a rumor, you're giving up all the edge. So the play was actually to short it. There may be people speculating, oh, there's going to be a better deal out there. Well, sometimes there is, sometimes there isn't. But that was just a slam dunk short. I mean, sometimes it still works. I mean, obviously we talk about buy the dip all the time, but we do talk about sell the rip. And when you get these ripping moves on some news, a lot of times those are fades, depending on obviously what the news is. But, we saw it with Regeneron and with Xilinx too. And we hinted, at that. I was saying I would be selling it if I owned it. And it's obviously it would have worked out again. So fading the news often works.
It does. And the thing that you were mentioning about it was just trading over the value of the takeout. So you were talking about
over the rumored.
Yeah, over the
rumored price.
Over the mathematics. And math.
Well, it's all math. I mean, everything I trade. I'm basically, I trade a lot of quantitative strategies, and you're looking at, different numbers. You're looking at what is that worth? So it's all math. You get a ratings change. What is that historically worth? If the thing's trading up 8-9%, a historical ratings change for this stock from that analyst is worth 5 or 6% or 4% or 3%, you short it. So it's all just quantitative edges that I'm looking for, looking for history to basically repeat itself. And, when I've seen this story play out before where you got a rumor, stock pops up significantly on the rumor. It's often, the rumor sometimes materializes, but when they're trading it up to where the potential rumored takeout price was, all the edge is gone. So the play actually at that point in time is to say, okay, well, everybody's getting too excited here and just have some guts and short it. And Regeneron would have been the same story. I mean, the stock traded up to $620. Quickly gave it back and closed below 600. That was after the Trump pump there. So, I mean, at a bare minimum, when you're in these things and they get these, pops on, rumors and stuff, I think the play is to take at least some money off the table, if not all of it.
You've seen this. This is not a new trend, right? We've seen this in a lot of things where these deals come out, they get announced, they go to a price, and then maybe the deal still gets done. But like a lot of time, also if you look at the time value of money too, waiting for these deals to close or whatever. But that a good example in Xilinx there, and we'll see. I mean, Sequence a private corporation, so you can't really draw on that. But how did AMD do on Friday? I know that it was down in the dumps, came back a little bit, not much, trading up 74 cents today. So. Merger Monday, but just a private and a public company.
Well, we have more this morning on the merger front.
What do you got?
Got HUYA and DOYU, HUYA and DOYU. Now this was on the table. Remember
what's DOYU symbol? DOYU.
DOYU. Remember,
trade that one.
Tencent is the largest shareholder in both of these companies, and they had proposed a merger of equals between these two. Back in August. So that's happening now. Both stocks were halted. They're out of the halt now. Here are the details. It's a merger agreement. It's an all stock transaction or stock for stock transaction. HUYA shareholders will receive a special dividend of $200 million. DOYU shareholders will receive a special dividend of $60 million. And this will close at some point in the first quarter of next year.
So is there a ratio?
Yes,
for this
there is.
takeout?
Yeah,
Okay.
Yep, I didn't get there yet. DOYU shareholders are going to receive 0.73 shares of HUYA for each share of DOYU that they own. So 0.73 shares of DOYU for each share of HUYA. And so you can see this morning when we talk about the market punishing acquirers, because HUYA, the company that is doing the acquiring, is now down this morning, and DOYU is not.
It's all about that ratio, and it's not even about punishing. So what happens is when the risk arb traders come in, they calculate that ratio, and you can quickly just take the current price of HUYA and do the 0.73, and you figure it out. And if it's out, they'll short the one and buy the other, and to try to bring that ratio in. And in so much cases that sometimes they just don't buy up the acquired company enough. So then they're just going to naturally short the HUYA, and that's what really brings it down. So that's the kind of mechanics, people just, and obviously I say it too, we punish the acquirers, but when it's a stock deal, it just comes down to that ratio. It's all about that ratio. Nothing else matters. Fundamentals no longer matter. So if you just take your trusty calculator and bring it up and do your grade 2 math here with your calculator, you can go with current price HUYA, $24 we'll just take, because that's where it's trading the pre-market, times the 0.73 will give you a price for DOYU of $17.52. So obviously they're putting a discount on it because we don't know if there's going to be issues or not with regulation and stuff, but it's trading at 1607.
You don't have regulation. You don't have regulation.
Yeah. So I know there's no regulation in China, haha. But okay, so $17.52. So it's trading at a 10% discount here right now. But what's that tell you? It tells you that eventually, if this merger does go through, the DOYU price has to go up, or the HUYA price has to actually go lower, because the spread is too too narrow there. So the spread's got to widen out a bit. So it can go in one of two ways. So if you can't buy the DOYU up, you knock the HUYA down, and that's the way the risk arbs do it. And that's the mechanics behind it, why you see HUYA going down. So right now you think, oh, I'm coming in, 24 is cheap. But is it cheap on HUYA? Because right now that discount's telling you the spread needs to get a little bit wider between those two. So the DOYU price got to go up, or the HUYA price has to go lower yet to account for that. And a significant amount when you take that 0.73 price. So you can quickly see that HUYA could actually go lower than this if DOYU doesn't rally. So that's all that matters, is now the relationship between those two stocks. And you know how I love my relationships. And this is the kind of stuff that I make my living on, is this kind of stuff. Because people coming in and just saying, I'm going to buy the dip on HUYA. Not so fast. It'd be better to buy the dip or to buy the rally on DOYU, because there's a 10% spread there still. So if you're so inclined, it's actually better to buy the rip in this case than to buy the dip on HUYA if you believe that the merger is going through.
What's the symbol on the other one?
DOYU.
DOYU.
So we just had a couple of deals close last week.
Wait, I just want to know, are they going to, what's the new name of the company going to be?
No.
Who do or do ya?
Neither. HUYA is swallowed.
I like who you.
Oh, I missed that one.
Who you, Joel?
I'm sorry.
Do ya? It's going to be who you? Who you? You who?
HUYA.
Wait, I just want to
named
ask
your company.
Dennis, you don't mind that these are 80 off exchange.
Well, you consider that you don't get big, like in these things, because you never know. It's a little bit of smoke and mirrors coming out of there every once in a while. So you got to be considerate to the fact that, okay, I think these are both real companies. I think this is a real merger. You got to think about stuff like that when you're changing Chinese names. The DOYU one, like I said, I don't know if I've ever made a trade in it before, so it might take a little bit of research there. But all I'm saying is, if you were just coming in here and saying, well, how can you go wrong buying HUYA down up $2? I'm saying, if from a risk arb perspective, you'd actually be better to buy DOYU up if you think the merger is indeed going through. Now, again, I have not done any homework. I've known about this for now literally 3 minutes. So, there might take some homework before I actually jump in. But the quick grade 2 math calculation on this tells me that DOYU is the better deal right now, if you believe the merger is going through. So that's what we got to find out. Do we really believe it? Probably.
Okay.
It's a real merger. Is it a real merger?
They don't need to buy a vowel. They got a lot of vowels in there for the new
Too many
names,
vowels, eh? Like, you put the vowels where there's consonants supposed to be, and okay. Next.
Like my writing. Spencer, get us off this one.
Yeah.
I'm sorry.
Right. So that merger is,
it's like my 3-year-old named these companies.
At the close in the first quarter of next year. I see tickers in the chats. I'm writing them all down. Don't worry, we'll do them all at ticker time later in the show. I want to talk about, there's a couple more on our list here. PCG. This one, if you didn't see the headline here, but according to I think the Wall Street Journal, PG&E approached California regulators and suggested that their equipment may have been the cause of another recent wildfire in California.
Stop causing fires.
Yeah. So if you woke up and you saw PCG down 7%, or it was down more before, that.
Well, I don't know. Like, they've already went bankrupt and they're trying to emerge
you-
from bankruptcy, and now they're burning down in the California here again. I don't know what to say about this. I've never understood it. From my experience, from a quantitative perspective, most of the time when companies go bankrupt, the equities stock goes down to basically nothing. This has been an exception to the rule, so I've never understood this. I don't usually trade it for that reason, because what I don't understand, I just stay away from. And okay, yeah, obviously bad news, but I don't know, the company's already bankrupt, and is this going back to zero because it's causing more fires? Probably not. I know there's some value here because it's emerging from bankruptcy, but I'm not a bankruptcy lawyer to tell you, what's going to be left, or assets. And we've had somebody on trying to explain that to me before, and it went over my head. I'm just not that smart, I guess, to understand it. So I just stay away from it. If you don't understand something, why trade it?
And I think that just look at it, if you look at the bottom right corner and you look at the monthlies here, I mean, it's been quiet. It's been in a trading range. So I don't even know. I mean, you can't do any ARB off this because maybe the bonds, are the bonds still trading, Dennis? Or
the preferreds were.
Yeah, preferreds were. So.
Yeah, I used to trade the preferreds against it, but then I didn't understand. I just stay away from most of those.
Okay.
The preferreds are thin too, man. You got like 50, 60, 70 cent spreads in these things, like 3-4%. So they're tough to trade.
Okay, back to my list here. Workhorse, they caught some financing this morning, secured $200 million in financing from institutional lenders. There's also the rumor on Friday that they are going to win this U.S. Postal Service contract. Mitch has been saying that news could come out as soon as this week. Workhorse continuing to climb here. I guess that short report really was the buying chance.
It looks like Roth Capital too behind it, saying they think they're going to win it too. This is an 8.1. I want to give you some perspective. This is an 8.1 potential $8.1 billion deal. This is everything. We've been talking about this on the show. If you're just listening for the first time, we've been talking about the Workhorse potential contract as a binary event for months. You're talking about a $2 billion company potentially getting, upwards of an $8 billion contract. It's a game changer. If they get that contract, the stock's going to be over 40. But we don't know, at least I think it would be over 40. Obviously, you never know anything in this market. But I look at it here. It's running up. Do I want to fade it? No, because it's all just risk. It's all about this contract. So, but you could even go out to the options chains, and I bet you they've priced this in there too. Like, we think we're going to get a news on this contract, yay or nay, in the near future. But if you go out, even looking out to, let's say, October 23rd, and you want to go out, for the 30s, which are like, and this is the closing prices. Options aren't open right now, but they were $3 out of the money. They're still trading for $2. I mean, so they're only giving you, first of all, we don't know if we're going to have a decision by then. Yep. We don't actually know when the decision, we can speculate that the decision is coming. But, they've got the premiums jacked in this stock because the options guys know too. They don't want to, sell an option, for $1 and then have it blow $10 against them. So it's all risk reward for them too. And right now they're pricing these with significant premiums. I'm just trying to look out and see if there's anything there. I mean, even if you went out to November, so just go out 1 month, November 13th, 1 month from today, the 30s, which are literally still over 10% out of the money, we're trading for almost $4, like $3, and they're wide too, 310 to 420. So you got a huge spread in there too. It's hard. So you buy those and they get the contract, and the thing goes to like 35 or 36 or maybe $38, and you make a little bit of money, but you don't make much. It's hard to make money buying options.
In Workhorse, you did get over 29 on this, so you are leaking a little bit. So this went to 29.50, and boom, 29.
Today,
several brackets. Yeah, today. So it's pulled off. If you see this thing up near 29.50 today, between 7:15 and really 8:15 for that whole hour, you had a sneaky seller up there, and now you're back down. It just hit 27, but I think higher the day in there, I don't think you're going to see that 29, unless of course they come out with the contract.
The contract news.
Yep.
That's all that matters. If there's another rumor that they're getting it, it's going to rally up too. Again, if they don't get this, if they don't get this contract, the thing's back at $15 or maybe lower. So it is a binary event. It's going to have a big move one way or another when this contract gets announced, and we don't know when that's going to happen.
And just on these short seller reports and stuff, they usually, they stick or they don't. Like, you don't have to hang around. Like, if you're hitting the bid in the pre-market or after hours or whatever, regular trading, and they go down and you get some follow through, you got to wait, a day, half it. I mean, Andrew left, actually, he'll have, some big moves, but a lot of times, man, these guys are dead wrong. And you don't know if they're out there buying, then they're out there buying when they come out with their report. And that's a whole nother ethical
thing.
Well,
we don't, they say they don't do that. We speculate that might be happening. They issue the report and then they're covered in their shorts from all the suckers who are selling it on it. There's speculation that happens.
Speculation.
I don't have any proof that happens. I'm not sure if regulators have any proof that happens. But the one thing is, it's such a gray area because it's just really an opinion. I mean, they put it out as a research report, but a research report from any analyst is just an opinion as well. And is it, illegal to talk your book? I mean, is it unethical to be covering in on buying something that you just told everyone to short it? It's definitely unethical. If they're actually covering it. But if they're not, then it's just an opinion. And, they're going with their opinion. And obviously, there's going to be significant moves. But the reason why these are often fades is because it is just an opinion. And opinions are a dime a dozen, really. Yes, a lot of these, they do their homework significantly. And sometimes they do materialize and find some fraud. In the case of Nicola, it looks like, a lot of that, obviously, maybe some of that was true, those allegations. But in some cases, none of it's true. It's speculation more than anything, and it's an opinion. I mean, the end phase was the absolute bottom that day. It got down to $37 back June 17th. The thing is $109 now. So a lot of times, you're correct, Joel, these are buying opportunities for decent stocks that are, get smacked 20, 30% sometimes on these reports, these short seller reports. And, what do we say? We buy the dip. And, here's a stock getting slammed, not on really their own fundamental information, but on opinion from an outside analyst.
We made a trading roll up on Friday.
What was your rule?
If you see, you get a short report, and I'm not even going to throw Fuzzy Panda in there, okay, the name or anything, and you go to their site and you can't pull up their site because their site's overloaded, then I don't know how much faith you want to put in that report.
They can't even handle the traffic.
You at least pump up your servers if you're going to do something like that.
Fuzzy. I mean, why do they name these things such weird names? What's the name of that one? Fuzzy Bear?
Fuzzy Panda.
Fuzzy Panda. Fuzzy Bear. Fuzzy Panda Research. Where do you come up with these names, man?
I don't know.
Sounds Chinese. Because that panda restaurant, the Chinese food.
Oh, are you talking about the one in
the malls? The Panda.
Oh yeah. Oh, that's the buffet. I wonder how.
I like that food.
Oh, I wonder how that's.
No, they're all closed. They're not doing great at all. Spencer's trying to take us off this.
Moving right along. Because I have a few more stocks on my list. And
sure, go.
What about Dillard's?
That's where I'm going next, actually. But Michael Pachter will be on with us in 7 or so minutes. He'll be talking video game and entertainment stocks. But let's do some more tickers on our list here. Dillard's here. If you're wondering what is the deal with that stock, up big this morning. One, they got a price target raise, but that is not as big a deal as a filing on Friday afternoon, a
insider buy.
Wow.
Not insider buy. Well, I guess you can call it that, but a passive stake from Ted Weschler.
Wow.
Ted Weschler?
If you don't know who that is, he is a investment manager at Berkshire. He is commonly mentioned among the potential successor to Warren Buffett. He has now taken a 5.89% stake in Dillard's. I don't know when he took the stake. I just know that he exceeded the threshold for a filing on Friday. So this could have been, several rounds of buying over the past, weeks or months or longer. But passive stake from a Berkshire manager is the reason for the pop in Dillard's.
It's up 15% today because we have a passive stake. Like Joel said, we have no idea when they bought this. You can see, actually, or do we? Do you see the actual SEC? Sometimes in the filings, you can actually see the days that they bought it. I don't know if we
He
see
bought
in
it
this
for
case.
Berkshire, or he bought it for his own
Yes,
personal?
he bought it for Berkshire.
Okay.
So he's put Warren Buffett into Dillard's.
Okay.
So the question is, can we actually see the day? Like sometimes you see these filings
It's not.
and they have the dates. They
not
don't.
broken down.
So, we don't. And obviously I haven't read the whole filing, so I don't see it just after looking at it for 10 seconds. But, I could have been buying at 25 or 30.
Right.
And now you're buying at 48 today because Buffett, I mean, again, late
This is
to
a
the
tough
party.
chart.
The second thing is, this is Dillard's, man. I mean, I put Dillard's in the same category as Nordstrom, Kohl's, Macy's. These are huge stores that anchor malls. Am I jumping and getting all excited and buying this up 15% because Warren Buffett potentially has been put in by one of his successors? No, sold to you, man. I mean, could it continue? We've seen some of these rallies continue, but if I was long this thing, I would say thank you very much, 13G filing. I will take the extra 15% and I will sell it to all of the people who believe that Warren Buffett is buying it this morning at 48.5 when he bought it probably a while ago, maybe even under 30.
Does it still have that preferred that you're in? I know you sold it.
DDT, yes, it does.
It still does, huh?
Yeah, and you know what? That's starting to come back towards par. And I was in this, so I was in Dillard's via the preferred for a long time because the preferred was one when Dillard's wasn't in trouble at all. So, if you go back to years ago, Dillard stock was doing just fine. And I was like, the DDT was literally trading at the 7.5% preferred. So I'm getting 7.5% of my money. And I just watch the common regularly. And as long as the common doesn't start to puke, I know I'm pretty safe in the DDT. Is it time to go back into that trade? Maybe, but are we completely out of the woods? I mean, we still got a wild card with COVID. We still got a lot going on. There's a hell of a lot more risk than there was when I was playing this 3 years ago. So, but it just continues to play. It's a capital trust security, so it's even better than a preferred. So they've actually got some when there's different types of preferreds, and the capital trust ones have a little bit more say in their distribution. But right now at this current price, it yields 8.12%. Pretty nice to get 8% on your money. I mean, obviously in this environment where people are getting 8% on Twilly overnight, they don't think that's attractive. But I'll tell you, just from a quantitative perspective, when you're a long-term money manager, having a little bit of preferred stock in your portfolio yielding 7-8%
Not bad,
doesn't hurt the bottom line.
I'll tell you, this is in a weird area. I see 50 as a pre-market high. There's no reference point there on the dailies, and there's nothing really there on the monthlies. This got slammed in March with everything else. So your next monthly high is 59.92, and that was from March, and then you were $70 in February. But just for now, if you're looking for follow through on this, really important for it to go through $50. You're $1.50 away.
I think it gets to 50.
It could.
I think it does.
51, 52, 53, come down to 47, go to 40. It could be all over the place. I wouldn't put a hard target. Like I'm not as confident in this one as I was at Workhorse. It's thin, exactly.
Dillard's is thin, and if they start pumping this on CNBC, which they sometimes do, they're looking for news and they're scrambling around. If they were to come in and start pumping this on CNBC and say Warren Buffett's buying Dillard's, you could really see it blast. So I'm not going to short it right now either. I would wait, but I'm watching it to short it. So I would wait until the little buzz around this Warren Buffett, buy fizzles out, and it will fizzle out. And then, maybe a strike, because here's a stock that of a company that I still think is not out of the woods by any means.
And the next the other thing we look for this is another catalyst. We look at the short interest. It's only 12%. So, but it's 46.75% short of float, but it's not like, an exorbitant like your GameStop or something like that. So
I think it's a little bit of a squeeze too, though.
Yeah.
I think this definitely has been started as a squeeze.
That's weird. The ratio, Oh wait, I'm wrong. Short percent of float is almost 50%.
Yeah, so it's a huge short squeeze. That's
I don't know what
I mean, all these like Al Brands, GameStops, these have all been short squeezes, and it's no coincidence that Macy's and Nordstrom's, haven't had the kind of moves. But if you go and you break it down, and just do a little bit of research, you can make some money just doing a little bit of research. You look at Macy's short interest comparatively speaking, and you say, why isn't that rallying? Well, Macy's is 40% too. So maybe that's a bad example. Maybe these things are just all loaded with shorts. Kohl's is 15, so Kohl's is less. I'm just grabbing them quick.
Wow,
And
Kohl's
these
is
lag, and it
$15.
depends the platform you use. You're never going to get them perfect. And Nordstrom's about 30. So again, Macy's is thicker though. It's a $6 stock, and it takes a lot more to move it. So these all have significant short interest, and I don't know, maybe these start squeezing too. I wouldn't want to be short Nordstrom and stuff right now because I'm seeing what's been happening in these other ones. But what are your thoughts here on all these? Is Dillard's going to turn it all around, and this is going to be, we're all going to go back to the malls, and we're going to be, going and buying our name brands in these big stores?
You're asking me. I never went to malls before.
Spencer. Actually, I didn't know you.
I'm going to forward your question to our guest, Michael Pachter from Wedbush Securities. Michael, I know this isn't necessarily in your coverage area, but you still going to malls?
No, I have this thing, and it's mostly because I cover the movie theaters. Nobody's dying to see a movie. Nobody's dying to go shopping. Yep. So, I kind of think that the world is split up between people who fear COVID and people who don't. And so, the ones that are over 50 pretty much fear it. The ones that are under 30 pretty much don't. And then the great unwashed masses between 30 and 50 settle down on party lines if they think it's a hoax or they actually think it's something to fear. But look at the customer for Dillard's. I don't even know who that is. I mean, I know what Dillard's is, but is it an old person? It's not Abercrombie, so it's not young people. So I would think probably until there's a vaccine, retail's just not coming back.
All right. Well, speaking of stocks like these that are in the midst of huge run-ups, you came out on Friday. You maintained your neutral rating on GameStop. You weren't suckered in by that wicked, whatever you want to call it, short squeeze, rally, whatever. Talk to us about GameStop. They had the news last week, the partnership with Microsoft. Talk to us about your thesis there.
Yeah, I'm actually going to talk to the CEO today because they read my note and it wasn't frothy enough. So they want to make sure that I understand that they are, according to them, in fact, sharing in the lifetime revenue stream from anybody who buys an Xbox there. And the truth is that when they sell a physical game, they get about 20%. So a $60 game, GameStop gets about $12. When Microsoft sells a digital game, a digital download, same $60 game, GameStop tended to get nothing. Microsoft would get about 30%, $18. So it appears that Microsoft has cut a deal with GameStop that if GameStop sources an Xbox Series X or Series S sale, so the new consoles, that GameStop will share in that $18 revenue. My guess is 10%, they're going to get $1.80. And, the lifetime value of that customer, he's going to buy about 13 games, call it, so if they were all digital, they get $25. If they are half digital, half physical, they're going to get the physical ones anyway. And they're going to make another, maybe $12, $13. So nice to have, not a big deal. The announcement was specifically about selling services, and it's very clear if you buy an Xbox under a subscription plan, and Microsoft's offering something similar to what cell phone carriers offer. You don't have to pay $1,000 for an iPhone. You pay like $100 a month, and that gives you cell phone service and a new iPhone. Microsoft's doing the same thing. It's $35 a month for 2 years, and you get Xbox Live, which has a $5 value, something called Game Pass, which is a subscription service for 100 plus free games. That's about another $10. And then the last, $20 is the installment purchase of your Xbox, which makes sense. You pay $480 extra, you get a $500 Xbox. So if GameStop sells that, they get a piece of the whole bundle. And again, my guess is they're getting about 10% because they make less than 10% on hardware. They only make about 8%. So this is probably giving them 8 on the hardware and 15% ish on the rest of it. Again, nice to have, but I think we're talking low double-digit millions per year in revenue. So maybe
so not enough to really drive the stock up that much.
Enough to move the stock maybe $1, and it kind of based around 6, and Ryan Cohen took it up to about 8 or 9, and the stock's ripped up to 12 or 13 on this. So I'd say what you were talking about, Dillard's, is right, short squeeze. So we had a big short squeeze. I spoke to probably a dozen investors on Friday, 2 longs and 10 shorts. And
Wow.
the longs are like, about time, great stock, and the shorts are like, what the hell happened? So yeah,
Yeah.
and the answer is somewhere in between. You know,
Are the shorts holding that you speak to, or are some people like, I can't take the pain? Do they hold through this?
Well, very clearly, based on the share price action, a lot of them said I can't take the pain. The open question was, is it a short up here? And realistically, you know, I have a neutral on it. I actually kind of like them, and I missed an opportunity at 4 to upgrade. I was being cute, thinking the stock could be at 4 or 5 when consoles launched. I could upgrade, take my target to 6 or 8, and be a hero. Now my target's at 8 and the stock's at 13. I missed it, you know. So you know, nobody cares what my rating is, but I actually thought it would go up on console launches. Those are happening in a couple of weeks.
I was actually about to ask you about that. Is there a trade to make there with the new consoles coming out in the next 6 or so weeks, 6 to 8 weeks? Is there a trade to make there?
Yeah, less than 4 weeks actually. They're coming out 3 weeks from this Friday. Yeah, I think that they're going to sell a lot of consoles, and the deal that they were offered on a piece of digital sales and a piece of the subscription very likely has been offered to everybody. So Walmart, Target, Best Buy are all getting the same deal. But people are going to buy consoles. And yes, I know we're in a global recession, and I know that without stimulus, it's just not going to get any better here. The fact is, early console adopters are rich kids. They're not, you know, unemployed waiters. And so, you know, early adopters, they're going to sell out of consoles, and GameStop's going to sell a lot, 40 to 50% of domestic console sales. So they're going to do really, really well in that quarter. And the question is, you know, is this management team going to keep up its streak of working capital management, cash flow generation? I think so. So I actually think they're going to start printing profits, and that's the change for GameStop. So
I guess
I think it's good timing.
I meant though more broadly, like beyond just GameStop, into
for sure,
into like Turtle Beach and Nintendo, Activision, Zynga, Glue, Take-Two, EA, all these stocks. Is there a trade to make like in the entire space?
Turtle Beach is a tough one, but yes, I mean they sell console headsets. The publishers are the ones who thrive, and I think actually what's kind of drifting below the radar is that, you know, you had Amazon make a very stealthy announcement about something called Luna, which is a subscription streaming service. It's crystal clear to me Amazon is going to offer a console in a year or so, and it's going to be cheap. It's going to be called an Alexa, you know, Echo device. It's going to just magically get games on your TV, and that's where you see a big boost for the publishers. You're going to see the publishers suddenly able to reach any Prime household. That's 150 million households. Probably fewer than half of those are console households. So they'll, you know, really see a giant increase in the households they can reach. And I frankly think Amazon Prime is going to keep growing. So you're going to end up seeing the publishers' addressable market double over the next 4 or 5 years. And that's a big deal.
The bottom line, we need to remember, if and when Amazon does launch their own console, just run and buy Take-Two, EA, and Activision.
Yes, and Ubisoft, and probably not Nintendo. But yeah, the guys who have content that is going to be available on any platform are the guys who win. You're going to expand the addressable market to people who either can't afford a console or can't justify the purchase of a console because they play one game a year. But I'd say over 10 years, you're going to see a 6 to 10x increase in the number of households who can play games between streaming and a cheap console. And so the publishers are going to easily see a double in sales in the next 10 years. And that's a big deal.
So, Michael, we look at a lot of these stocks, and the gamers have actually underperformed in the last month or two. They've pulled back significantly from, you know, they had a hell of a run through the summer. Is this a pullback then to maybe be looking at an Activision Blizzard and looking at an EA and looking at a Take-Two?
It's a seasonal pullback, and you always get this kind of letdown. It's especially accentuated now because, as you said, they had such a giant move. And unfortunately for me, unfortunately for investors, there are these third-party data services that just suck. I mean, they just freaking make shit up as they go. Pardon me, I'm not allowed to say that. They make stuff up as they go. These guys, you know, credit card data companies and guys who measure ordinal rankings on the App Store. And so, you know, they see a really minor decline in anything, they go crazy, and they cannot factor in work from home and shelter in place. So the data services hire a bunch of 25-year-old data scientists, and they're looking at year-over-year rankings, and they don't understand that the market's up 30 to 40% year over year because of work from home. So they've been pounding these stocks and saying that, oh, we're seeing a slowdown in Grand Theft Auto Online or FIFA Ultimate Team, and they just have no idea what they're talking about. So yes, good opportunity. Of the publishers, the one with upcoming catalysts is actually Activision. They have a really good setup for a favorable year-over-year comparison in Q4. They have a World of Warcraft expansion launching. They launched a free-to-play game called Call of Duty Warzone last March, so it's up against nothing in the fourth quarter from last year. They have their normal Call of Duty, and it's a super light lineup this fall. There is no Take-Two big game, no Borderlands. There is no EA big game, no Battlefield or Star Wars. So Activision is just going against Cyberpunk, which is no big deal. So I like them the best. I think Zynga is the sneaky play. The data services are pounding those guys. Zynga is going to freaking crush it. They have set themselves up to just beat and raise and beat and raise. And that's the stock that's on our best ideas list, as is Activision. Those are the two I think have the most positive surprise, have the best catalysts in Q4, are the most fundamentally, good stocks and great management teams for both.
We're on the line with Michael Pachter, analyst for Wedbush Securities, a longtime guest on the show. And I remember you sticking with GameStop when everyone was pounding it. But I wanted to ask you, I can't think of the name of the company that's starting up with Apple and the App Store wars. I mean, I know you don't follow Apple per se, but is this going to be a lot of noise here, or is this going to be something that, is going to have long-term effects for the App Store and the gaming industry?
I'm not sure what you asked. What company is doing what?
I got it. You're referring to Epic Games, the owner.
Oh, Epic.
Of Fortnite.
Yeah, sorry about that.
Oh, I'm sorry. In court. Yeah, Epic's real. Epic is a good proxy for Unity with a lot more free cash flow and a lot higher revenues. Unity's trading in the 25-30 billion range, and Epic just did a capital raise of 17. They have higher revenues and much more cash. So I think they're going public in a year or two, but I think that's an interesting one to put on the radar. Epic's going to beat Apple like a drum in these wars. So this war. And my colleague Dan Ives covers Apple. He thinks Apple wins everything because of their size. This isn't David versus Goliath. This is mini me Goliath against Goliath. So Epic has they generate at least $1 billion in free cash flow. So this is going to cost them maybe $100 million in legal fees. They are willing to take the pain. They happen to be right. Apple, if you buy something in Fortnite, that's their game, on the Xbox store, you buy a skin, and then you go play it on your phone in the App Store, your skin shows up. So they allow you to purchase off their platform and use the item in their game on the App Store. Epic merely tried to let you buy currency in the Epic Store to use in their own game on the App Store, and Apple said no and booted them off the store. That is the definition of anti-competitive. So if you go look at and a lawyer here, if you go look at all of the antitrust laws and Sherman Clayton and the Securities Acts of 33 and 34, Apple is breaching those rules in a textbook fashion. They're doing everything wrong. And they're doing it because they're pig-headed. They think they're right, and their lawyers are letting them run rampant. They are going to lose, and they're going to lose bad. So it's going to take 5 years because they're Apple, and they will spend whatever it takes to appeal. But I love Epic on this side. I think Epic is, and the cool thing about Epic, they tried to sell currency on their store at a 20% discount. So they're passing through the Apple tax to their consumer. That's an awesome fact, because again, these laws say do what's best for the consumer. Here's Epic passing through the toll charge from Apple to the consumer, and Apple says, no, you can't do it. We like prices high, and we should make a profit. Screw them. They're going to lose. I love this lawsuit.
Definitely opinion there. Also, no, I like that. That's what we like to hear. I heard some statistics regarding the next generations and sporting events, and I think I think it's just alarming that I don't even can't keep track whether Gen Zers or whatever, the people that are going to be growing up, and there just seems to be such little interest in sporting events, and you're seeing this being reflected in sports ratings right now. They're down across the board. Just talk about, this is a long-term catalyst for like ATVI and Take-Two Interactive and EA. And the last thing, did you watch? I know you're out there in LA. Are you a Lakers fan?
I am today.
Okay, because I'm watching those events, and it seems like they're making it like the video game. Not that I've ever played like NBA Live or whatever it is, but it seems that like they're, with no fans and everything, it seems like they're morphing in that direction. I just wondered if you notice that, and just talk about the generational change here in sports consumption.
I mean, they're definitely marketing to the audience, and so they're trying to attract a young audience. And if you think back to, say, the 1990s, maybe we started getting pop music piped in, instead of the organ music at a baseball game. And the idea was that they wanted to keep the yuppies happy. And then we started getting better food offerings. You could buy something other than hot dogs and beer in the last decade. So clearly they're trying to keep younger people engaged. I don't think that the decline is breakdown of the nuclear family, decline in interest. I think it's actually just alternatives. We back when I was a kid, it was linear TV or go to the movies. Those are your two choices. So we watched a lot of sports, and there really wasn't that much programming. So we watched a lot of sports, and our dads watched them with us. Now everything online, on demand, all the time. My 20-year-old daughters, who would otherwise probably not be interested in sports, barely venture out of their bedrooms, and they watch on their MacBooks and watch Netflix, and they're now finally watching on TV, but everything on demand. So I think that the bigger issue is how do advertisers reach these people, and they're going to go wherever they feel like going, and advertisers have to follow the eyeballs. Sports is still important. But the average age of a baseball viewer is the same as the average age of a Cadillac owner. It's old people, and I don't know that baseball is ever going to recover. Basketball might, and again, it's not because people don't like basketball. It's just soccer wasn't a thing when I was growing up, and now soccer is huge. So people watch English Premier League. We just did a deal with Fubo TV. You can watch a ton of soccer, as part of that streaming service. And it's super popular. So, I think this is just hours. Entertainment hours are going to be spent based on the activity that the consumer likes. Video games is the sweet spot for that younger demographic. They're not watching sports. Yes, they are playing video games. But it's not a perfect translation. I mean, it's young people are going to be 40 in 20 years, and they're still going to be playing games. So that market's just going to keep growing. And, our dads are dying off, and baseball's losing fans. That's a problem.
Yeah, Fubo is one of the better sports cord-cutting options for sure. Michael Pachter is an analyst at Wedbush Securities. Also has a YouTube show of his own. If you go on YouTube and search for the Pachter Factor, you will find his show, his comments, more on this space. Michael Pachter, thank you so much for the time today.
My pleasure.
All right, let's get back to the chat. We have a few minutes left in this show. I've been writing down some tickers intermittently throughout the hour, and I want to get to them. Actually, first, let's just do Twitter here. Twitter caught an upgrade this morning from Deutsche Bank to buy, raising their price target to $56. Wow, is that a street high? That I don't know if it is, but if it isn't, it's close. Let me see here. That might be a street high on Twitter.
Yeah,
$56.
And they're looking at the charts here too.
It's not. Pivotal is 59, but it's close.
They're timing this because this has been a consolidation station here. And, we just had Michael Pachter on, and they do look, and obviously Michael Pachter was saying, he missed it. He was looking at it at 4 or 5, potentially to upgrade GameStop, then he missed it. I mean, you look and, the analysts will wait to strike, and they'll look at pullbacks to strike too. We're seeing that in DraftKings here this morning too, which we can get into in a second. But, if you're bullish on it, they like to wait for a little pullback here before they raise, because obviously that's where they're marked from. it's where everybody's going to say, oh, you upgraded it when it was at this price. So, their opinions matter to them for sure. So you look at Twitter and you think it's been in consolidation station for 3 days. It's looking for a catalyst. DB says, well, let's give it a catalyst. We'll upgrade this thing right now. And that's what's happening. It's up to, I think Twitter does go through 50 sooner than later. I'm long Twitter, so I'm completely talking my book here. But I've been long Twitter for a long time now. And I'm going to stay long Twitter. So not in the trading account, just pure in the longer term portfolio. I think the story is still intact.
47.87. That was the high of the move. You're pressing up right against that right now. Seems someone's trying to get a little better exit price than 48. 48.18 is your pre-market high. Made a couple highs right between 48.04 and 48.18. Just from memory, Twitter does move off these upgrades and stuff, but it will also give you that buck drop intraday too to perhaps get in lower. But going in to see what it can do. Longer, if it's holding 48 after your first 15 minutes of trading, then hey, you may even see that 50 today. Right now it's trading up over 4%, 47.84. New high for the move here. And Twitter just quietly went from 40 to 50. And remember that 40 number? It opened at 40, went to 45, closed at 40, went to 70 and change. And then we all know what happened after that.
That was a blast from the past.
Yeah.
I mean, it's grown into, and obviously it's grown into the valuation to a certain extent. It's still got a crazy valuation on it, but I mean, people are using this thing and the president's using it. And I go to it and, and I can't find a reason for why a stock is moving. I'll go try to search it on Twitter. And sometimes you find the reason there too.
Yeah, you mentioned that.
It's like a news source to a certain extent. So,
all right, DraftKings getting an not upgrade, initiated at a hold this morning.
A hold?
I'm sorry. There's two.
I didn't see that.
There's two. There's initiated an outperform from Credit Suisse, and then Deutsche Bank is out with a hold.
Yeah.
The Credit Suisse rating is outperform and a $76 price target. The Deutsche Bank rating is at a $48 price target. Credit Suisse probably, like you said, Dennis, the catalyst this morning.
Yeah, they are for sure. And they're looking, okay, we want to be all, maybe they had a bullish piece ready to go, but they're like, well, we're not going to chase it when it's going up. We'll wait till it pulls back. And then, our rating will be a catalyst to maybe kickstart it going the other way. So now they're marked from 48.82 and they're obviously getting the boost here. The one issue here that we have is that, and that's hit Penn, it's hit DKNG, it's hit the LCA as well, to a certain extent, is that we're seeing more cases and people are concerned, is the NFL season going to get all the way done, or are we going to eventually be at a point where we have to cancel more games or potentially cancel the season due to COVID spread? I mean, that's the wild card for these. So NFL, obviously, a little bit different. NHL tried a bubble. NBA did the bubble. That worked well. MLB did not, but MLB seems to be getting through it. So they can find a way through it, but COVID's a wild card for these companies. So, and, what you were saying in the longer term trends where people just aren't watching sports, there's less. I mean, the ratings were brutal on the NBA finals. I looked at the ratings on that too.
The ratings are down for every sport this year.
Exactly.
Probably has something to do with the fact that A, we're in a pandemic, and B, it's an election year. But the fact
it's not, and I just know, like, I'm a huge hockey fan, and I wasn't that excited either. It just didn't. It wasn't the same without the fans in the stands. Like to a certain, even when you're watching it, it's like it didn't feel real. It felt like preseason. Like I know it was real, and yes, Tampa Bay did win the Stanley Cup, and yes, we saw obviously NBA Finals workout and awarded. But I mean, I just didn't feel it was like. It didn't feel as real to me as it normally does. Like I mean, the fans add so much. So it's hit, it's hit from COVID. Those ratings are hit from COVID for sure. Even the TV ratings, because you think, the TV ratings will be higher because nobody's going to this thing. They're watching it all from TV. And the hardcore fans are always going to watch. But the people who are like, in the middle of the bandwagon fans, it's not that easy to get on the bandwagon when there's no fans in the stands. And you're not seeing, the roar, and they're trying to put the fake roar in. And that's why it feels almost fake. So COVID really hit these. Do we get past COVID and eventually sports go back to where it was? Maybe. So, I still think I'm long Penn Gaming. I'm long LC. I think the betting within sports is not going away. So, and this is a pure play on that. So, am I a buyer of DraftKings on the pullback? Maybe. I don't know. What do you think?
The 52, I mean, this just didn't handle the offering as much, as well as Penn did. So I'll just kind of keep that level in mind here. I know it's trading up 50.73. The offering's already done, but I don't know. When you have a significant level like that, maybe some people decided to hold on, see how it trades. Maybe you wanted to get a Penn-like move. But let's see, 48.82 was your close, 51.13. This has had this has had a 1, 2, 3, 4, 5-day losing streak. So let's see, getting up over and closing over 51.70, which is closer to that 52 offering price. And I'd say, hey, maybe get a little run back up, test the 50% retracement of this last move here. But it's come off hard, and we'll see if it can recover. Pre-market high, just over $51. So there's some excitement. Keep an eye on 51.05. That's 65 cents from Friday's high for DKNG. And Mr. Market's kind of nice up, and this is kind of, it's up more on a percentage basis, but we'll see what happens at 52.
All right, I want to cover a couple more quickly. TrueCar, TRUE. This is not one we talk about too frequently on the show. This is from the Benzinga Pro Chat.
What's the?
TrueCar?
There's no news here. It's just, this is from the chat.
Yep.
It looks sleepy. It was an ugly candle on Friday. So, you can say, it's nice rounding bottom, but it had the breakout, and the breakout kind of failed miserably there. So I don't like that candle at all from Friday. It looked like a blow off top to me. So now you run into all kinds of troubles getting back near that 590. So I can't get interested in until this is above 6. Below 6, I'd say this thing's not looking as nice as it did if you would have asked me 2 days ago.
And TRUE, right?
True, yes.
Yeah. What do they sell? Cars that don't lie?
Yeah.
What is this? No. Great.
I laughed. I thought that was kind of funny.
Great support at 5. If it comes down to that area, and you're right, you did get close to 6.
It's used cars.
Yeah, used cars.
So,
I'd be more inclined.
This isn't Carvana.
Oh, that's right. Okay. $5, great support. Trading up at it's that a little, not much is traded there. This is a tough one. I think I'll lean on the triple D analysis on here, that you got up near 6 and then you came back. So it's going to take a couple days. 591. That was a high on Friday. So prove me wrong. Take out that 591, close over 6. Couple closes, and then make a run at 650. But not a great looking candle on that on Friday.
Let's just do one more. Peloton here, up another 2% again this morning. No news. Doesn't need news. It just goes up because that's what Peloton does.
It does. It just goes up, and it gets a pullback, and you start thinking, okay, well, that was an ugly candle 2 days ago, closed near the lows. What do they do the very next day? They just start buying it. I mean, this thing is just, nothing matters. The story is still intact. Yeah, and until we start getting a vaccine and we start going back to a normal way of life, Peloton's going to continue to catch a bid. People are hiding out in this stock. They think this is a safe place to play, that this wins, in a COVID environment, and they think it wins when we go back to normal. If we go back to normal, I'm not so sure about that, but we're so far away from going back to normal that I can't see, just the Peloton just rolling over. It rolls over. It's crowded, but this is going to be buyers beneath. There's underneath demand for this stock. For the simple reason is that COVID is not apparently going away. And like Michael Pachter said, half the people, maybe are, not scared of it, but there's a lot of people who still are. I mean, I don't do anything. So I don't go anywhere. I don't go to restaurants. I don't sit out on balconies. I don't go over to my friends to watch the game because I'm still scared of it. So, and you're all entitled to your opinions. If you're not scared of it, do what you got to do. But I just don't know, and obviously Raznick had it and it wasn't too bad. So, I've got a heart condition. My kid's got asthma. I'm going to stay scared of it for a while because we have pre-existing conditions. So
we used our Peloton 6 times this weekend.
Whoa.
Lisa did.
Wow.
Lisa,
are like the most fit person I know at 67 years old.
That I'll take the under. Over. 4 times Lisa. She did.
Holy Lisa, she's a machine, man.
Yeah, I know. She did the like the 30-40 minute bike thing, and then they have a good stretch app. And also our pool's
like
closed.
a yoga thing.
I jinxed our pool. Recent pool we joined is
Does
closed.
it? If you grab onto the Peloton, will it like stretch your legs and like move around, like pull you back?
There's
Maybe we
stuff
should-
on there, Dennis.
Oh,
Even
do?
your old crickety body could do
I
some
know
stuff
my
on
old
there.
cricket. I got to get myself a Peloton.
You should.
The
You
day
should.
I buy the Peloton, it's the top in the stock. The day I buy the actual bike, like I go and I ordered a Peloton, that'll be the top. Because
That's
I'm
what
the
everyone
last
said when
person
I
gonna
bought
buy
it in
this.
the 40s.
Well, usually you are. I mean, usually you are the last person to buy the thing, but you bought the bike and then you bought the stock. So
that was
anyways.
December. Thank God we did that. But anyways, 9:04, Spencer. I
We
hope
got
we
Abbott
don't have
Labs.
the.
Abbott Labs breaking news right now too.
All right, let's do Abbott Labs and then we'll call it a day.
Yeah, they got the emergency youth author. What is it? Youth emergency use
What are you?
authorization.
What is that movie with
That's my
Oh.
cousin.
my
Vinny.
cousin Vinny?
My cousin Vinny.
Utes.
Yeah,
Utes.
All right, they got
You had the emergency Utes. Did you
Joe
say
Pesci
Utes?
was in that, right?
Yes.
Yeah, it's awesome. That's one of his
Alright,
best
there we
movies,
go.
man.
All right. Emergency youth.
And it wasn't violent.
authorization for their COVID antibody blood test is the actual headline here. So
They got the Utes for it.
they got the youth. They got the youth authorization.
I'm saying Utes every time now. Going for it. Okay.
Blast off. Not really.
The stock's held up. I mean, I think most of the good news is baked into this thing, so I have trouble coming in and buying Abbott Labs here. But the chart doesn't look bad. So it's trying to break out over 110. So if you just ignored, the fact that it seems like all the good news from COVID testing, all that is, been faded before. I mean, they're just kind of on a breakout.
111.74. That was your high back in August, and that's protecting that 114 high. You just sniffed 112 here. Now you backed off to 111.15. So I'll look at that 111.74, that 112 area. I'll call that major resistance now. And even I think if you clear that, I don't think you're going to say like a whoosh up to 114, because I think a lot of people got stuck in these 2 days, matching rain days between 112 and 114. All-time high 114.20 from August 28th, and your all-time closing high. Now it has a chance to do that today. Your all-time closing high was on that same day at 110.79.
All right.
There was one more.
One more.
We're in overtime. This is over. Pre-market prep
I
overtime.
was not prepared for one.
PMPOT.
Oh my goodness.
PMPOT.
Juniper. We can.
Oh, he goes to Juniper. He
Oh,
scrambled, was looking for anything. Juniper.
I'm going from the
Who's talking?
chat.
General Electric.
yeah,
We're
let's
going to
go.
go further in the chat and find something more exciting than this.
I saw
Juniper 23 resistance. Wah, wah. General Electric is General Electric. We don't have to say anything about that. Short squeeze. And
What about Are You Correct? Asked. Wait, that's got to get over 7 at GE.
Yeah,
That big
General
Goldman Sachs rating.
Electric.
Someone mentioned, Dennis, you're better with these kind of charts than me. The Zebra Technologies, ZBRA. To me, it's like it's going. It's got a major win streak going.
Oh
I
yeah.
don't know.
290 major resistance.
Yeah.
You're coming into the end of the run.
I think so too. 291.18. You want to get up and get over that, and then that all-time high before you hit 300. But look at it, just amazing. Look at it. It took 3 days to go, 4 days to go to 295 to 250. I don't know. It's making a pretty big move back on the upside. Little lofty for me.
We didn't do the SPAC of the day.
Oh, what's
DPHC.
what's that one again?
No, the SPAC of the day
right,
from Friday night.
The
The Red Sox.
Yeah.
Oh, the Red Sox.
The
Red Ball Acquisition Corp.
RBAC. Yeah, that's the ticker there.
Red Bull is getting into that, huh?
Red Ball is
Oh,
so they're doing a deal.
not
What
Red
is it with the
Bull.
Red Sox?
This is Billy Bean's SPAC, and they're
Oh,
gonna,
really?
they're going to take Fenway Sports Group public.
I don't know about that one.
This is your way of owning.
The market doesn't know either, because look at the blast off Friday night and the crickets since then. So it's come all the way back down, and they're like, this isn't a sexy EV play. This is the declining sports play that Joel was just talking about here. So the market was all excited Friday night. It's like, oh, the Red Sox, and then they started hitting it.
Doesn't John Henry?
Maybe if it was the Tigers.
Oh, doesn't John Henry? Who owns the Red Sox?
Yes, it is John. Well, he's majority owner of Fenway.
He's a savvy commodity trader, man. I don't know. I don't know if I'd want to fade him, but I don't know. Sports teams, sports television. I don't know. I'd be a little tepid on
Green
that.
monster, not green today.
Yeah. Let's see.
A little
$10,
bit green.
isn't it? Don't you automatically buy this at $10?
It marked at $10.
You just
Not
buy it,
after. Before the announcement, Joel.
Oh, okay.
Before, so you had to sell into the spike and get rewarded for holding it for the last 5 days. You only had to hold this one 5 days. It's only been out there 5 days. This one. This is 5 days.
Okay, $10.
Boom! You're rewarded with a 40%. Well, Friday night was very little volume, but you could have easily got out 12 to 12.50 this morning if you got up early. Now it's 10.80. This thing's fading. I don't know. Maybe it gets a little CNBC love, but this isn't a sexy EV play.
All right. If you got any good tips or anything, any good knowledge from our show today, hit that like button. We appreciate that. Wish Dennis a happy Canadian Thanksgiving. Everyone else,
Eat my Canada Goose tonight.
Happy Columbus Day for those.
Happy anniversary to Dana. This is her first year wedding anniversary.
Happy anniversary.
Yeah. Can you believe that? Like a year like that? Remember that? Holy mackerel.
A lot's changed in a year. We were all having fun that Saturday night. Raz was there. Spencer was there. I was there. Enjoying ourselves. Not even worrying about social distancing whatsoever. You know, we were giving hugs, everything. It was good times. And now it's
I'm glad I got that one in. I don't think
I want to. And my buddy Tom got married this weekend too, and he had to do the social distance wedding. So he put it live streamed it, and we watched it all. How things changed in 1 year. So we'll say congratulations, Dana. Congratulations, Tom. But you know, obviously, weddings a lot different than they were a year ago.
Could have saved me a lot of money doing it virtual, but I'm not. You know, we'll put that aside.
All right.
Well, PJ Williams is helping you out. He just flipped you 99 cents.
He did. PJ is our most consistent contributor. Yeah, peanut butter and jelly Williams.
We appreciate it, PJ.
PJ, why don't you email premarket@benzinga.com and we'll send you a t-shirt or some swag.
Look, at 99 cents. Look, we're selling t-shirts for 99 cents here right now.
Please
you give us a 99-cent thing, you get a t-shirt. I'm going to give you 99 cents. I never got my t-shirt.
Yeah, where's your t-shirt? And also ask Raz.
I didn't get past customs.
We were also supposed to get some care package before the quarterly meeting. Did you get that, Spencer?
I never even heard about the care package.
Well, yes, but the caveat it was full of nut products. So I just threw most of it out.
They were trying to kill Spencer Israel here with the nut package.
Yeah, Joel, you're the same way. So just
Spencer sits on a peanut and his butt breaks out.
You didn't miss much. It is my point. Okay, we're wrapping up here. Please remember all the information from our show meant to be used as informational purposes, not for investing or trading advice. Everyone have a great rest of your Monday. Joel and I will be back at 3:40 p.m. Eastern Time.